Hello everyone, welcome to Options with Doug, streaming live on Monday, Wednesday, and Friday at 1:30 p.m. Eastern Time on Bookmap Discord and the Bookmap YouTube channel. Before I get started, I need to go through the disclosures. General disclosure, all Bookmap limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure, trading futures, equities, and options involves substantial risk of loss. It is not suitable for all investors. Past performance is not necessarily indicative of future results. And bear with me just a couple of minutes. I'll make this as quick as possible. I do have a brief introduction. Here's my contact information. The best way to get in touch with me is through Discord. My name on Discord is Doug P. Also on Bookmap Discord, there's an Options-Doug chat channel. That's a great place to post questions, comments, and content related to the topics of my presentation and the topics of the channel that I'll go through in just a moment. I'm also on X. My name there is @DougPless. Here are the key tenets to my approach for trading. This is the basis of my approach to trading. I believe that options trades and market maker hedging activity are key drivers of price in many stocks and futures, and certainly in large cap tech stocks like the Magnificent Seven stocks, as well as the equity index futures. And for the S&P 500, SPX is the underlying index. The ES futures contract is a derivative of SPX. SPY is the ETF version of that index. And when traders buy and sell puts and calls in SPX and SPY, market makers take the opposite side of those trades and they hedge their delta exposure with ES futures. And for the NASDAQ 100, NDX is the underlying index. QQQ is the much more liquid ETF version of that index. And the NQ futures contract is a derivative of NDX. And just like the S&P 500, when traders buy and sell puts and calls in NDX and QQQ, market makers take the opposite side of those trades and they hedge their delta exposure with NQ futures. The focus of my presentation today and the focus of the Options-Doug chat channel is options order flow, the impact of options markets on stocks and futures, and the influence of market maker hedging flow on price action. I have a two-step process for trading, and the first is planning. I use positional analysis. I look at how traders and market makers are positioned in the options market and how those positions change from day to day to develop a thesis regarding the expected trading range and volatility for the day, as well as a directional bias. And the second step in my process is execution. I look at real-time order flow in Bookmap and real-time market maker hedging flow in Spotgamma Hero to confirm my thesis. And for setups, and when I talk about setups today, I will be focusing on an underlying asset. Setups in that asset can be taken with futures contracts, shares of stock, or options depending on the asset. Questions and comments are welcome, and I will be watching both the Options-Doug chat channel as well as the chat in YouTube for your questions and comments. Please feel free to post. I'll do my best to answer your questions. And hello, Stephen. Welcome. Glad you're here. Here's my agenda for today, Monday, July 8th. First of all, I want to go over news items, economic data, and events for the upcoming week. Then I'll go through my positional analysis. Then I'll review some setups from earlier today. And then I'll take a look at the live market. And when I get to the live market, if anyone has any stocks they want me to take a look at, please let me know and I'll be glad to do that. All right, let's get started with news items for the week. And I'm going to go to the Spotgamma homepage here, take a look at the upcoming events for this week, shown right here on the events calendar. First of all, Jerome Powell, Fed Chair Jerome Powell, will be testifying before Congress tomorrow and also on Wednesday. So Tuesday and Wednesday. Tomorrow before the Senate, looks like that is 10 a.m. And then before the House on Wednesday, also at 10 a.m. So that's Tuesday and Wednesday. Then Thursday, big economic data release. 8:30 a.m. Eastern Time, CPI data comes out. And then on Friday, the PPI data comes out, 8:30 a.m. Eastern Time, and then Michigan Consumer Sentiment at 10 a.m. on Friday. Also note that bank earnings begin on Friday to kick off earnings season. All right, so that is the news for the week. Again, we'll be watching Jerome Powell tomorrow and Wednesday, and the CPI data on Thursday. All right, let's move on to positional analysis now. I'm going to start with the S&P 500. This is the ES Futures and Bookmap. And before I take a closer look at this chart, I'm going to take a look at a higher time frame. I'm going to go to the underlying index, that is SPX. We've all seen this chart before. One-day chart for SPX. Let me just point out a couple of key turning points. First of all, this is April 1st this year. Correction began, and then the rally resumed the Monday after the April 19th options expiration. And after the May expiration, shown by this red vertical line, there was a bit of a pullback. And the rally resumed. And then next expiration, the June large call-dominated expiration, there was a bit of a consolidation. And then last week, the rally resumed again on really July 1st. All right, so let's take a closer look at that. Let's go to a 1-hour chart. Again, a Thinkorswim. This is a 30-day, 1-hour chart. All right, so this is the rally resumed July 1st. So consolidation after around the June expiration, that's shown with this, shown with this vertical line here, maybe difficult to see. And then the rally resumed. All right, so that is the current price action for SPX. Let's zoom in on this chart now. So that pesky 5,000 level is now gone. So we can zoom in on the chart and take a closer look at the levels on this chart. All right, so the dashed purple lines are showing the lower and upper weekly expected move. That's based on the options market, based on the closing price for SPX from last Friday. And then the dashed blue lines are showing the lower and upper daily expected move, also based on the options market, based on the closing price for SPX from last Friday. SPX not doing much today, trading well in the middle of both of those ranges. All right, so those are the expected moves. I do post those levels in Discord every day, and I post them the evening before. All right, the dark red lines on this chart are Spotgamma levels. These are based on gamma-weighted open interest. They're provided to Spotgamma subscribers, and they're shown on a variety of trading platforms. I'm going to point out the key daily levels here. First of all, this cluster of levels, 55.45, that's the put wall. That's a strike with the largest net negative gamma that can be expected to act as support. That level did move up from Friday. And the next level above that is the absolute gamma strike, just above that at 55.50. That's a strike with the largest absolute positive and negative gamma. Then just above that is the volatility trigger at 55.55. That is Spotgamma's proprietary volatility flip level. Below that level, market makers' position on the gamma curve is negative. In a negative gamma environment, market makers have to trade with price to hedge their delta exposure. That tends to enhance or increase volatility. Above that level, like SPX is trading now, market makers' position on the gamma curve is positive. In a positive gamma environment, market makers have to trade against price to hedge their delta exposure. That tends to subdue or decrease volatility. And note that, note that the gamma for SPX, we'll take a look at that in just a moment, is on the extreme side of positive. It is I think probably one of the largest numbers I've ever seen. All right, so in a positive gamma environment, I'm looking for more mean reverting price action rather than trend days, so more range days rather than trend days. And then finally, the call wall is at 55.85. That's a strike with the largest net positive gamma that can be expected to act as resistance. Note that level did move down slightly from 5,600 on Friday. Spotgamma is attributing that move down to a large position that I believe does expire today. So expecting that level to move back up to 5,600 tomorrow. All right, so very narrow range here in the key daily levels. All right, so just to summarize the shifts in levels, volatility trigger, put wall shifted higher, call wall shifted lower into a very narrow range. All right, let's wrap up our view of SPX with a 1-minute chart. Very mechanical uptrend, and that was also shown on the chart that we just looked at, the 1-hour chart. Looks like a little bit of a trend break today. This is today right here, this dark shaded portion on the far right. Let's just zoom in on that. So the call wall up above at 55.85, and this combo 2 level has been in play for today. Now may be acting as resistance. All right, so SPX trading at a narrow range today in a very, very positive gamma environment. All right, so let's go back to Bookmap now. So in Bookmap, I have my own cloud notes. So I can show spot gamma levels. Here's that combo 2 level. So that is the SPX 5573 combo 2 level for SPX. I'm also showing SPY levels. There's the 556, and around that level, between that level on the upper daily expected move shown by the dashed blue line, was resistance earlier today. So I've got SPX levels, SPY levels, and then key ES levels on this chart. Though there's a difference in price between ES and SPX. That ES to SPX offset today is somewhere between 54 and 55. So I'm using 55. So this 55.65 level, SPX 55.65, I'm showing that at ES 56.20. All right, so that's the S&P 500. And for SPY, the volatility trigger, call wall, and absolute gamma strike all shifted higher. So that is a bullish hat trick for SPY. That is, again, bullish. All right, let's move on to NASDAQ now. Go to the NQ futures and Bookmap. Another choppy day here in NASDAQ. Let's take a look at the underlying index charts. I'm going to go to QQQ first. QQQ also in a choppy, narrow range today. No gamma levels, no spot gamma levels in play for today. Just the 496 round number and 497 round numbers. All right, so not a lot to see there. Let's go take a quick look at NDX. Also not a lot to see here. Choppy price action. All right, so again, I have my own cloud notes, so I can show QQQ levels. Here's the 497 and the 496. I also have NQ levels on this chart, 600. So really the only solid reaction at any level was this morning, right around 950, reversal lower at the QQQ 497 and the NQ 650 level. All right, shifts in levels for NASDAQ. There were none for NDX, and for QQQ, the volatility trigger and put wall both shifted higher. So slightly bullish for NASDAQ as well, shifts in levels. All right, let's wrap up our positional analysis by taking a look at Gamma Notional. This is market maker's position on the gamma curve at the beginning of the day. For the S&P 500 and NASDAQ, note all these numbers are positive. And with the exception of QQQ, all numbers shifted higher from Friday. Note this number for SPX is very, very large. Again, I'm not sure I've seen it that large. So just as a reminder, again, in a positive gamma environment, Spotgamma assumes that traders are short calls, market makers are long calls, hence the positive gamma. And they have to trade against price to hedge their delta exposure. One other number is the Spotgamma Gamma Index. This is what Brent, the founder of Spotgamma, looks at. And this is the highest I've ever seen this number. The theoretical range for this number, I thought, was -4 to +4 on the upside. So I've never seen it at 5.6. All right, so extreme positive gamma for SPX. Definitely looking for mean reverting price action rather than a large trend day. All right, so my thesis for today was looking for lower volatility, but definitely with a bullish bias based on the shifts higher in the levels for SPX, SPY, and QQQ. Also considering the large move up last Friday and perhaps looking for a little bit of consolidation. All right, let's move on now to some setups. I'm going to start by taking a look at what options traders have been doing today. I'm going to start with the S&P 500. So the levels that we've looked at, everything that we've looked at so far, other than Bookmap, is based on static data that's updated once a day, sometime overnight. Spotgamma takes open interest data. They apply their algorithms to that data to come up with the levels, the gamma notional. Now let's move on to execution, move on to real-time data. So again, I'm going to start with the S&P 500 by taking a look at what options traders have been doing today. So this is the HERO signal. This is available to Spotgamma subscribers. HERO is HIRO, Hedging Impact Real-Time Options. What this chart is showing, this particular chart, is showing a combined signal of options trades and market maker hedging activity for SPX, SPY, XSP, and ES futures. There are two lines on this chart. The white line is the price for SPX, and the purple line is the HERO signal. A falling HERO signal indicates traders are taking negative delta options positions. They're buying puts and or selling calls. And a rising HERO signal indicates they are taking positive delta options positions. They are buying calls and or selling puts. So this is the index signal. There are two signals that we can take a look at for the S&P 500. This is the index signal. And the other signal is the equity signal. So typically, the index signal is a little bit more noisy, more up and down. And the equity signal is a little smoother line. And what this hero signal is showing is options trades and market maker hedging activity for all 500 stocks in the S&P 500 index. And in both cases, both charts, the price is in terms of SPX, the price, the white line, SPX. And sometimes the index signal provides a more clear signal, and sometimes the equity signal provides a more clear signal. And today, I would say it's really more the index signal providing a little bit more clarity. So let's zoom in on this chart. Focus on the morning. Focus on this reversal right around 950 as SPX was approaching the 55.85 call wall. Traders were taking positive delta positions on the way up, and just right after 950, that sharp reversal, they started taking negative delta positions and price reversed lower. So let's go take a look at that setup in Bookmap. I'm going to zoom in on this. So remember, traders started taking negative delta positions right around 950. Price started to move lower. The volume dots in Bookmap show market buy minus sell. Green volume dots indicate more buyers than sellers. Buyers become exhausted. Traders start taking negative delta positions. Some aggressive sellers start to come in, shown by the magenta volume dots. Price makes a lower high right around 10.15 and moves lower. Pretty narrow range. Good way to trade this would have been to, instead of, well, certainly selling futures or buying a put spread, selling a call spread. All you're doing in that case is saying, I think price is going to remain below this level. And taking a look at the subchart here, initially both the cumulative volume delta shown by the dark blue line and the stop orders were rising. That flattened out and then dropped sharply just after 10:15 when the S&P 500 made that lower high. Sharp drop lower. Sell stop orders fueling the move lower, shown by the sharp drop in the yellow line, as well as the on-chart indicator, that small red dot. All right, so short setup this morning in the S&P 500. Again, ways to play that. Buying a put spread, selling a call spread, or just selling futures outright. All right, so that's the S&P 500. Let's take a look at NASDAQ. NASDAQ, a little bit stronger today, making new highs compared to the S&P 500, which is not. All right, let's go back to Hero now. I'm going to close full screen, go to NASDAQ. Hello, Caesar. Welcome. Glad you're here. All right, so NASDAQ, again, there are two signals that we can take a look at. This is the index signal. This is showing options trades and market maker hedging activity for a combined signal of NDX and QQQ. Price shown in terms of NDX, that's the white line. Hero signal, again, purple line. All right, so that's the index signal. And there's also an equity signal. In this case, for the Magnificent Seven stocks known as the Magnificent Seven. So this chart, this hero signal is showing options trades and market maker hedging activity for Apple, Amazon, Google, Meta, Microsoft, NVIDIA, and Tesla. These stocks make a very large portion of the NASDAQ 100. All right, so let's go. We can really take a look at either one of these signals. We'll go to the NASDAQ signal. Seems to be a little bit more closely correlated with price today. Open full screen. Similar short setup right around 950. Hero signal makes an equal high. As price makes a higher high, then starts to move lower, 950. Notice also just before 11 a.m., this hero signal jumps up pretty sharply and price responds higher. So let's take a look at the short setup and the long setup. Go to NASDAQ. Here's that short reversal at the 497 and the NQ 20,650 level. Price makes a series of lower highs, then right around 11 a.m. aggressive buyers start to come in as traders start taking positive delta positions. Price jumps up, fueled by aggressive buyers, shown by the rising dark blue line, cumulative volume delta, as well as buy stop orders, shown by the rising yellow line. So short setup, reversal at 497 again, and then reversal around 11 a.m. at the 20,600 level as the hero signal shifted from negative delta to positive delta. So let's go back to hero. All right, I'm going to shift to puts and calls, take a look and see what options traders have been doing today. So they're buying calls shown by the rising orange line, positive notional value. Let's move on to Mag 7. All right, so in the Mag 7, this is the other signal that we can take a look at for the NASDAQ. Traders have been selling calls. That's definitely been driving price. They're also buying puts. Negative notional value for both. And this is definitely in contrast with last Friday. There were aggressive call buyers in both the index options as well as the equities options. Aggressive call buyers, and then there looks like maybe taking profits today. All right, let's move on. Let's take a look at some stocks. I'm going to start with Apple. So the orange line, falling orange line, shows that traders were aggressively selling calls this morning. The flow alert comes in right around 9, just about 5 or 6 minutes after the cash open, indicating significant options activity. Traders are selling calls, not doing much with puts. Put line pretty flat. Definitely selling calls. Price moves lower as traders start to take profits from the calls that they were buying last week. So let's go take a look. And those also, very typical pattern here. Call sellers take their foot off the gas right around 10 a.m. and price starts to recover. So this downward pressure of traders selling calls, market makers buy calls, they have to sell stock to hedge their delta exposure. That pressure stops right around 10 a.m. and then we'll see in just a minute, most likely aggressive buyers start to come in. So let's go take a look at Bookmap. Go to Apple. All right, so here's Apple, sharp drop lower in the morning, below VWAP. As traders are selling calls, a lot of aggressive sellers shown by the magenta volume dots. Then price reverses right at 10 a.m. as traders stop selling calls, and there were some aggressive buyers coming in shown by the green volume dots. This indicator in the subchart here is the Market Pulse price change indicator. There are a variety of algorithms with the Market Pulse indicator. This is again the price change. I like to use this to note if you wanted to trade this long, trade this reversal. These Market Pulse price change extremes shown by the bright red on the downside, bright green on the upside, often mark the deeper pullbacks that are good for long entries. So here's the first deep pullback, second deep pullback for a long entry back up to just about the open, right around 227. All right, so there's Apple call sellers. Driving price in the morning, take the foot off the gas, price recovers about back to the opening price. All right, the next I wanted to take a look at is CrowdStrike. Note the levels here. This 380 key gamma strike acted as support today. Let's zoom in on this. Pretty similar picture to Apple. Call sellers just after the open. Here are a couple of flow alerts to get your attention. Price reverses lower right around 396. Aggressive call sellers, they take the foot off the gas. In this case, at the 380 key gamma strike that acts as support. And in the case of CrowdStrike, price consolidating, moving a little bit higher after that sharp drop lower. Let's go take a look at the Bookmap. Go to CrowdStrike. Sharp drop lower. Let me change zoom just a little bit. 380 key gamma strike. Acts as support. Sellers are exhausted. And price recovers about midway between the high and the low, right around 387, as the call sellers have taken the foot off the gas, and now price oscillating up and down just around VWAP. All right, that's CrowdStrike. And the next stock I want to take a look at is Meta. And by the way, I'll be glad to take a look at any stocks anybody wants to take a look at. Please let me know. I'll be glad to do that. Caesar asked for Boeing. Sure. I've got a couple more I want to take a look at, then we'll get to Boeing. All right, so sharp drop lower for Meta. Remember on Friday, Meta was up, I think, about 30 points on Friday. So maybe a little bit of a blow off top in Meta. So let's see what options traders are doing in Meta. Zoom in on this. A little bit more bearish here in Meta. They are selling calls and buying puts. Puts shown by the falling blue line. The floor alert that pretty much came in right at the open. Traders aggressively selling calls, taking profits from last week. And in the case of Meta, traders continue to sell calls. So a little bit of a consolidation, but traders are continuing to sell calls. So a little bit different than Apple and CrowdStrike. Notional value for both the orange line, the call line, and the blue line, the put line, both negative for today. So again, they are buying puts and selling calls. And right around 10:30, 10:35, put buyers took their foot off the gas. And that's about when Meta started to consolidate. Let's go back to Bookmap. So Meta finding support right around 529 so far, testing that level again. Note the liquidity here in Bookmap. This dark shaded area, that shows those are limit buy orders. Again, shown by the heat map and Bookmap, a history of the limit orders. Below price, those are limit buy orders. So it looks like those orders were consumed, and then they started to fill back in. All right, so that's Meta. Let's move on to NVIDIA. Note NVIDIA 130 is the call wall. So let's go take a look at Hero for NVIDIA. NVIDIA was pretty weak last week. So it looks like traders are taking advantage of the dip. Traders came in. They were buying calls. When traders buy calls, market makers sell the calls. They have to buy stock to hedge their delta exposure. They're also selling puts, shown by the rising blue line. Flow alert comes in just after 9:40, and the call buyers take the foot off the gas as price moves up to the 130 call wall. And they call buyers become call sellers. And then again, as NVIDIA dips down, they start buying calls again, and that call buyers and put sellers now have both taken their foot off the gas. All right, so that's NVIDIA. Call buyers in the morning take their foot off the gas as NVIDIA reaches the 130 call wall. Price moves down, call buyers and put sellers come back in. So in this area right here, orange line, blue line moving in the same direction, price moves higher. That's a very powerful directional indicator. So let's go back to NVIDIA. Note also there are a lot of aggressive buyers, shown by all of the green volume dots, as price moved up to 130, and then finally reversing 130, 130, 60, 70, something like that. Price makes a lower high, breaks below the call wall as some sellers start to come in. Now, price also consolidating up and down around VWAP. Let's go back and take a look at Hero. I'm going to zoom in a bit. So it looks like price is trying to move higher again. So if I were looking for a long setup here, I would look for this orange line to start rising higher. So maybe for a little bit of a long scalp, watching hero if that orange line starts to move higher, and you think VWAP is going to act as support, kind of a maybe a little bit of a double bottom here at VWAP, price target at 130. So a little bit of a potential scalp, long scalp at with VWAP support 130 price target. So I'd keep a pretty tight stop on that since the price target is just right above. All right, let's take a look at Tesla. Tesla was crazy strong last week. I think Tesla was up about 50 points in the week last week, something like that. Very strong. All right, so mixed picture here in Tesla. Let's see what options traders are doing. Whoops. Go to Tesla. So up and down, really driven by call buyers and sellers. Let's zoom in on this just a bit. Orange line showing traders were selling calls from the open as Tesla was trading around the 250 call wall, key gamma strike. Dip buyers came in, started buying calls. Then again, as price this time moved above the 250 call wall, key gamma strike, call sellers came in. And this time, that 250 level acting as support, call buyers come in again. And now right around noon, they took their foot off the gas. Tesla moved lower. All right, so call buyers and call sellers driving price. Also aggressive buyers and sellers. Note, as traders were selling calls at the open, there were a lot of aggressive sellers here shown by the magenta volume dots, the large magenta volume dots. And as price started to reverse higher, some aggressive buyers were coming in, shown by the green volume dots. Price breaks above VWAP. Then the aggressive sellers start to come in as price made it all the way up to 259. Magenta volume dots starting to come in more and more. Price makes a lower high, cumulative volume delta, shown by the magenta line in the subchart, starts to shift lower, shifts from neutral, starts to shift lower. Hello, Sky Blue. Welcome, glad you're here. So I see you're an Anurag and in YouTube. Same question posted both places. Hi, Doug. Could you explain the zero gamma combo level in other terms? Is there a place website that describes these terms, starting with what's most important? All right, so yes, you can go to spotgamma.com, go to the help center, the resource center, and just look at the help. Spotgamma has a great support pages. You can find definitions for all those levels. And I tend to talk about what I think is most important. So the 0 gamma level is actually the level that gamma shifts from negative to positive. Spotgamma places more emphasis on the volatility trigger, which is often close to the 0 gamma level, but they place most emphasis on the volatility trigger, and that is where Spotgamma's, they think that market makers' hedging activity will shift as gamma shifts from positive to negative. So I would suggest, again, going to spotgamma.com, look at the resource center. By the way, that's free and available to everyone, whether you subscribe to Spotgamma or not. The combo levels are combining SPX and SPY for the S&P 500, combining SPX and SPY gamma-weighted open interest into one level. And you can take a look at those levels. Let's go to the I think the combo levels are still on this chart. So here's the combo strikes right here. And this shift, positive gamma above the horizontal axis there to the right, negative gamma below, and you can see the shift there. This is showing that combo strike at 55.56, which is essentially the same as the 55.55 volatility trigger. So again, just go to spotgamma.com for more information. All right, Caesar wanted to take a look at Stephen, thanks for posting the Spotgamma Academy site. That is actually where you can, I think that is paid training. So if you want to go to the free help, go to the just go to spotgamma.com, go to the resource center. All right, let's take a look at Boeing. Boeing call buyers on the way up. Price breaches the 190 call wall. And after that breach, the call buyers take the foot off the gas, start selling calls, and Boeing breaks down below the 190 call wall. So it took a while, but the 190 call wall doing its job, acting as resistance as expected. All right, so there you go, Caesar, kind of a very slow move lower. Just kind of a rounded move lower. All right, any other stocks? Again, does anyone have any stocks they want me to take a look at? All right, I'll answer Caesar's question first, asking about what do you make of that flow alert on Boeing. So if I was watching Boeing, see this flow alert right after the open. See the rising orange line. I don't have Boeing in Bookmap, but I would be looking for a long entry. Now, in the case of Boeing, looks like there's, let's zoom in on this. Get a closer look at this. So just like the NVIDIA setup that we just looked at, not a lot of room to run. So looking at this flow alert, right after the open, I see the rising orange line. That is my signal to look for a long entry. Pull back to around 188. I know 190 is the call wall, so I'm looking for 2 points on this move. So a quick move up to 190, and I would be out at this point. So it looks like Boeing moved on up to 191, but I would have taken profits or moved up my stop as Boeing reached the 190 level. So nice pullback entry there at 188 up to 190 as traders were buying calls. All right, Caesar asked about the afternoon flow alert. So that, in that case, that is not really telling me much. I would have liked, I think a flow alert right here would have been much more timely. You know, that the flow alert's based on an algorithm and can often signal mean reverting price action. Certainly a flow alert right up there would have been more meaningful, signaling a shift from bullish to bearish options trades and market maker hedging activity. But that flow alert, maybe there was just not enough of a shift to trigger a flow alert. Now that flow alert did come in right before this sharp drop lower. So in the case of Boeing, we're looking at hindsight here, but this flow alert much more meaningful. So if I was looking at Boeing in the morning, planning to trade Boeing, and saw that flow alert, saw the rising orange line, I'd definitely be looking for a long from 188 up to 190. All right, Sky Blue Anurag asks, are there any free courses? Courses, no, I'm not aware of any free courses. Again, the Academy, that does provide paid courses. Those are not necessarily how to use Bookmap. I think for the basics of Bookmap, go through the Resource Center. You can subscribe to Bookmap, watch the subscriber Q&A webinars. They're typically 2 per week, one on Monday, one on Thursday, and then also watch my webinars. I'm showing practical application of how to use Bookmap and Spotgamma to place trades, and I'm talking about what makes sense to me, what is most important to me, and again those. Sure, I understand you're asking for Spotgamma, but I'm doing a Bookmap webinar. So, but yeah, for Spotgamma, I don't know of any free courses. Now, for Bookmap, there's plenty of free learning. Learning Center, as far as I know, there are no paid courses for Bookmap. But again, for Spotgamma, that Academy that Stephen pointed out, those are paid. All right, let's move on. So does anyone else have any stocks they want me to take a look at? Let's go back to the S&P 500. Let's check on NVIDIA, see if that long scalp may have been playing out. So the call line starting to rise. Looks like price is still maybe stuck around VWAP, not moving much. Let's go back to the S&P 500. Also stuck on VWAP, also point of control. Light blue line there is VWAP, and the dark purple line just below that is the point of control. Check on NASDAQ. Let's see what options traders are doing. Start with the S&P 500 index signal. Traders buying calls. Net for the day They are call buyers, 1.56 billion positive notional. Equity signal. Net for the day here, they are put buyers and call sellers. Notional value negative for the equity signal. It's kind of a mixed picture for the hero signals for S&P 500. NASDAQ. Options traders not doing much right now. All right, again, does anyone have any stocks they want me to take a look at? Looks like Apple is consolidating now. Just scanned some other stocks here, so it looks like call buyers have started to come in on AMD. Call sellers in the morning. Reverses higher right around 11 a.m. Let's go take a look at Bookmap, take a look at AMD. There's the reversal at 11 a.m. Pullback entry. Sky Blue asks, is your rolling window at 1 day for hero signal, or is it something else? I always use 1 day. So let's go back to hero. So here's the question. This rolling window, 1 day. So this is looking at the entire day, the rolling window. So as the day goes on, this hero signal accumulates from the open. And I always leave it at 1 day. I used to change it if I was going to zoom in the afternoon or take a closer look at what was going on in the afternoon, but now I just zoom in on the chart, and that provides all the information I need. This is what Brent, the founder of Spotgamma, does as well. I don't think he ever changes his rolling window period, as far as I know. He's talked about leaving it at 1 day and then just zooming in like I just did. All right, so there's AMD. Call buyers coming in around 11 a.m. Price moves higher. Amazon finding resistance at the 200 call wall, key gamma strike. Flow alert comes in just after Amazon breaks below the 200 call wall. Let's take a look at Bookmap. Go to Amazon. Amazon breaks below the 200 call wall. VWAP. Hero signal comes in. Now price down, trading down around 198. Call wall doing its job, acting as resistance. Let's go back to Hero. Again, last call for stocks. Check Meta again. Traders continue to sell calls in Meta. NVIDIA, not much. All right, so this stock asked, How do we get the C levels and CVP? You have it on the right columns. All right, let's go. We'll take a quick look at that. All right, let's go to the S&P 500. All right, so the columns that I have, this is the current order book. This is default Bookmap, current order book. This is the CVP, chart volume profile. So this is showing the volume profile of whatever price range I have shown on this chart. So as I zoom in and out, that will change a little bit, the chart volume profile. And then this is the session volume profile. So that is showing the volume profile. Whoops. Sorry about that. I think I clicked the whiteboard on my pointer there. Sorry about that. All right, so that is the chart volume profile, session volume profile, and then this is my own cloud notes here. And I use that in conjunction with an add-on called Price Lines. This is available in the Bookmap Marketplace. I've shown this spreadsheet before. I fill out all the information in this spreadsheet. That's for NASDAQ. This is the S&P 500. Fill out all this information in this spreadsheet. And then this Price Lines add-on shows all the levels that I want to show, as well as the horizontal lines on this chart. And I just call this C levels. All right, so current order book, chart volume profile, session volume profile, those are standard Bookmap, and C levels, that's my own cloud notes. Again, I use an add-on called Price Lines to show these levels. All right, everyone, my time is up. I want to thank you very much for watching. Thanks for your questions and comments. I hope I was able to answer your questions. If not, please let me know on Discord. I'll do my best to answer your questions. All right, everyone, have a great afternoon. Remember, Jerome Powell testifying before Congress Tuesday, Wednesday, and we'll talk about it on Wednesday afternoon. All right, thanks, everyone. Bye.